Now we shift our attention over to an industry with arguably the most diverging outlooks out there. So here to weigh in and share with us the latest developments, we have with us David Leechiu of Leechiu Property Consultants. Good morning, David, and welcome to the broadcast.
Morning. Thanks, Danny, for having me.
David, in your last briefer, you mentioned that you're seeing early signs of recovery in the property space. I have to press you on that, whether you can say with confidence that rock bottom has already hit, and what exactly do you mean by recovery? Is that in terms of vacancy rates? Because there seems to be a lag effect still on that, according to other people. Is that on the pricing? Have we already hit rock bottom instead of pricing? So kindly enlighten us on why you believe that recovery is already underway.
Yeah, so I think it's because we've been through the worst of the COVID crisis in the sense that there was a lot less hope a few months ago, and then the vaccines came out. You had a lot more opportunity for foreclosures, but those things were stemmed and delayed. And jobs continued to be created in the BPO sector. Um, and then this whole development of the TRO against the Pogo sector really slowed down the exodus of the Pogo sector, and that's big. And from what I hear, the politicians, the administration, the Pogo sector are all trying to work something out because the 9 months that the Pogo sector was constrained, people appreciated the economic benefits of having them around versus not having them around. And it's not just the tax issues; it's also the travel bans and the ability for the foreign labor to enter the market or exit the market here in the Philippines. And as more vaccines are out and available in the world in the next few weeks to a few months, and the visa certifications for or the vaccine visas are made more available, then more people will be able to access the labor markets from abroad to come here, and that will be the other component that will make the recovery of the Pogo happen. And when they do, it's going to soak up a lot of the vacant space that's available coming online in the pipeline. And as you know, the delays, more and more construction projects are being delayed because of COVID protocols, and so that's going to defer the supply even further down the year. And then I think 60% of all the spaces vacated by Pogos in the last 12 months are PEZA spaces. At a
Okay.
time when PEZA space is so scarce that people are backfilling that space by BPO companies who are growing, have been growing in the last 7 8 months.
David, can I just press on that Pogo issue? It's
Sure.
a TRO, right? So in any case, it can still occur once they do decide, or if they actually do decide to impose the tax. To what extent are Pogo companies already willing to reestablish themselves, given that there's still this uncertainty on the table?
Well, the two components that need to happen will be a compromise agreement between the industry and the government, which includes the not just the national government but the Senate and Congress. So all three political platforms have to agree together with the Pogo sector, which I think the Pogo sector is more or less pushing. I'm confident that they're gonna come up with some level of agreement because, as we all know, our people, our representatives in government are very rational people, very practical people.
Okay, so wait and see mode in terms of that. Now let's talk about the other parts of the recovery here. You did mention in your recent briefing that you sold a property in BGC, if I'm not mistaken, for an amount that's much higher than the prices pre-COVID. Tell us, is this a one-off? Is this exceptional to that space in particular, or is this telling of the rest of the industry when it comes to a quick rebound in prices, especially as others have pointed out, businesses have yet to pivot, companies have yet to close, and we might be actually be feeling the pain towards this year still.
Yeah, so I think I think that's a very big boost for confidence that the property market is resilient. And what makes it resilient is that the private sector has very low levels of debt, and there's no pressure in the private sector higher end market to 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 be distressed sellers. Number two, there's a lot of money out there, and the money is just going to keep increasing because of the lower tax rates, the increased borrowings, election spending coming up around the corner. All those things are just going to mean that more money is going to look for a home somewhere. And Bonifacio remains to be the best property market in the Philippines. It remains to be the most expensive, most valued property market in the Philippines. And that's because that's the risk premium that they're willing to pay. You want to buy property in Bonifacio, it comes at a very high price. But that price, in return for that price, you get a lot of stability and a lot of certainty about your investments.
Okay, so people do have money to spend there. They're just sitting on cash for the time being. You mentioned infrastructure play, and especially in your report, how that is supposed to buoy the property space. But we have seen some delays, particularly in our two airport projects here. Are these again firm specific related issues, or does this also signal that we might not be able to meet our build targets, and as such there might not be this recovery as quickly as we were hoping?
Yeah, I think culturally, and you might find this culturally, we're very good in drawing things, but we're very poor in executing these things. And
Okay.
the credit we can give this administration is that they, because of sheer political will, power, and force, we were able to complete a lot of infrastructure projects that normally would have been delayed, grossly delayed because of politics and whatever issues. Most of those things went away. So that's the biggest credit we have to give this administration as far as infrastructure development is concerned. And there's a lot more in the pipeline. Whatever delays you see now is probably just one off because the general intent is to make these things happen at a shorter time. And what many people have to appreciate also is that 15 years ago, many of these projects were unviable because of the high interest rate environment. Today, interest rates continue to collapse despite the fact that they are at record lows. And the fact that they are at record lows will make many of these infra projects
Okay.
viable, profitable.
Just on that topic, and before we let you go, David, and I'll just put it all in one question: do we have the money? Does the government have the money, especially given that the budget is going to also be proportionate to the COVID recovery response? There's still a lot of fiscal spending that needs to happen to have this recovery. And on the other hand, what would be the impact of the 2022 elections on all of these projects, and particularly on the property recovery?
Yes, we do have the money. We've moved our debt ratio from 39% to 53% GDP, debt to GDP ratios. And even with that massive increase in such a short span of time, we still have one of the lowest debt numbers in the world, proportion to GDP. The second thing is, with the additional borrowings coming up, with the lower interest rates, with the collapsing of interest rates, that's going to just make money more and more available to the public, more and more available to the middle class and below, and that's going to steer construction activity and real estate activity throughout the country, not just in Manila or NCR. The OFW money is going to keep flowing in, $30 billion a year, and most of that gets sucked in by the government and the big conglomerates for their businesses. The lowering tax rates, the ayudas plus election spending, which will be pretty significant source of liquidity, plus the emergence of Pogo sector will all, I think, make money swish around in the Philippine economy much more than before. And and you just have to look at the sentiment all around the world and how vaccine after vaccine is being made available to the general public. That's exciting, and that's dramatically improving sentiment all throughout.
Okay, so still some ammunition there, particularly for our government to continue with these projects, and the interest rates hopefully buoying consumption as well. Thank you so much for those insights, David Leechiu of LPC.
Thanks, Danny.